Welcome, I'm Catherine Magana here with Steve Wolf, Greg Carroll, and Vince Stefano, where we're here to provide some insights about the markets, investing, and planning. So here we are coming off Wall Street's big election rally. Obviously, the elections are now done, but the markets have moved a lot since last week. So we're looking at the Dow Jones is up, the NASDAQ, the S&P 500, and the Russell 2000. The biggest mover we're seeing has been the Russell 2000, some of the small cap stocks from last week to this week, and today's November 7th, but from last week to this week, the small cap stocks are up about 8%. So that was a pretty big move in about a week. And obviously today we're looking at the Fed, and we're anticipating another cut. We're looking at 25 basis points shortly, so which we kind of expected, but at some point there was also talks about there being 2 rate cuts, but I think it looks like potentially this might be the last rate cut for the year. But it's been an interesting couple of weeks, so we're just trying to kind of wrap up the rest of the year here and go from there.
I think the rate cuts, I think that what I've been reading, why they're only going to maybe have just this next one today, but with Trump being in the new president, there's a lot of things going to change. We will have the tax cuts that he put in place in 2017. They will probably be extended, and some actually might even be lower, like corporate tax rates. He's trying to go down to 15%, I believe. So, with lower tax rates, tariffs, deregulation, a lot of this stuff is going to actually be more inflationary, and therefore the Federal Reserve might have to slow down on the easing. So it will be interesting to see, that first 100 days of what Trump kind of puts out in front of us as far as all his campaigning.
So 2 days ago, the election took place, and Trump won. Trump won on the Electoral College and also apparently on the popular vote. I think that was a little bit of a surprise to people. But yesterday's market was interesting because the, quote, Trump stocks did phenomenally well yesterday, and the non-Trump stocks dropped. And when I say some of the Trump stocks, and you may get a kick out of this one because prisons and detention centers did well. You can take that any way you want, but that was one of them. Credit card companies did better, and it goes back to some of what you were saying about looser regulations. I mean, even Jamie Dimon, who said he was Democrat and I think said he was voting for Harris, said, you got to stop with the regulations. And I heard on the radio yesterday that there was something like 43 or 45% of the companies that were involved with some sort of issue with the government wanting to regulate them. I mean, that is a huge number. Wow. So that should ease up a little bit, and I think that's another reason why the small stocks did better. Yeah. There's just a whole bunch of things that happened, and yesterday, let's see. Now on the downside, retailers did poorly. And that's likely due to the tariffs that they're talking about, that Trump is talking about. And I've said before, I'm not a big fan of tariffs because I think tariffs raise the cost of goods. But it's also my understanding that one of the reasons they wanted to do it was because the countries in the rest of the world are imposing large tariffs on us. And so what Trump is saying is that, look, if you're going to do that, then we're going to do that. And that's the reason I hate tariffs. Okay, because one says, well, if you're going to do it, I'm going to do it. All that does is really raise the cost. Green energy stocks took a hit yesterday because obviously Trump is saying, hey, we want coal, we want nuclear, we want oil and whatever. So a lot of the green stocks took a hit yesterday. So a lot happened. And lastly, as you know, well, it may not be lastly, but at least lastly for this segment, I follow the CNN Fear and Greed Index, and we're up into the greed category, and that's just in like a week. Actually, it's just in a couple of days. We were just about in the fear territory last week. Wow, we're now in the greed. I mean, that's a big jump in a small amount of time.
One of the you took a lot of my thunder because crypto, coal, nuclear. But one of the areas you were talking about regulation, and one of the areas that has been really heavily regulated over the past 4 years has been big pharma. And one of the areas that big pharma looks at a lot when they are looking to enhance not only new products, but also revenue generation, is small cap biotechnology and mid cap biotech. And so right now there's been a big negative impact on M&A activity. And every time there's been even a suggestion of a takeover, it seems to be throttled by government regulators. I think if that goes away, you're going to see a lot of M&A activity in small cap bio.
I say that's why the small caps.
And that's why small caps are starting to rally. Look for big, and the other thing you have to remember is a lot of small cap stocks are small financials and small energy companies. Look at, you were mentioning bank stocks. Big bank stocks have had huge amounts of oversight, and especially investment banks. So investment banks, along with big pharma, may be looking to some smaller companies to put some add-on M&A activity. So I think you're going to see a lot of that over the next 4 years. I think you're going to also see the energy complex be completely unleashed. Lower interest rates, lower taxes. It's interesting because one of the negatives is big oil, because as you unleash energy, the price of energy, or the price per barrel of oil, should come down as more and more is produced. However, I think that's going to be incredibly beneficial for the overall inflation in this country and prices. So you may start seeing that come down nicely. I'm still a big fan of technology. I'm going to stay with technology, but I also want to see, give the new administration a chance to implement some of their policies and see how it affects the market.
Going back to the bank stocks, mergers and acquisitions are expected to be more favorably looked at with this administration. So I was just looking at yesterday, Discover Financial popped almost 20% on the expectation that its merger with Capital One was going to go through. Who knows? I mean, Capital One was up 15%, but I think this is what's happening. Some of the stocks that are, and some of the areas of stocks that are expected to do well with Trump might happen. Now, who knows if that merger actually does happen or not? We don't know. And quite honestly, I'm not sure I would buy it after a 20% pop. But nevertheless, this is what's happening. Bank stocks just flew yesterday.
Yeah. Another area is Trump is really going to focus on is immigration. And like you said earlier, Steve, about private prisons and legal services are probably going to see some upside with, tightening up the border. Now, Trump's also talked about, mass deportation, but I think that's going to be too expensive to just round everybody up and get them out of here. But some of the losers because of that, if we do tighten up the border, is agriculture, home builders, and hospitality. A lot of the migrants that are coming over fill those spots. So, there could be higher wage costs trying to find workers to fill those spots. So, there are downsides out there too. So
yeah, I think we have. I've heard this argument about we need all the migrants to fill all of the working spots. Well, there was something, I don't know, take your number, 15, 20 million people that came through. We don't need anywhere near that kind of number to fill up the agricultural positions.
Sure.
So, I mean, there's some pluses, there's some minuses. And by the way, going back to the detention centers, I'm quite sure that there are a lot of people who think that Trump should be in one of those detention centers. So,
52 million people.
Is that what it was?
Whoever voted for Aaron.
Is that what it was, 52 million? I don't remember that.
I can't remember the exact number.
Yeah, somewhere around 50. It was really close. What was it, a million?
Right, but I think you're right, too, about so in general, I think stocks are being advantaged, but bonds, the opposite. And I think you're right about the where we're going with interest rates. Interest rates may continue to be high because of some of these. So you've got some pluses and some minuses.
Yeah. I mean, you look at what the longer-term bonds were doing this past week. I mean, the interest rates are going up. Even though the Fed kind of has lowered some, the bond market rates are going up. So
I wouldn't mind.
It could be sticky.
I wouldn't mind seeing a normal bond curve. The dreaded recession that everyone was talking about never happened, although there are some people who say we actually have what they call a rolling recession, so that different sectors of the economy were in recession, but not all at the same time.
Right.
As you're talking about interest rates, I was just looking to see, because obviously there's short-term rates that are out there with lot of investors that have cash or in CDs. So right now, it looks like the 1-year CD rates are at about 4.15% approximately. So it's a big shift from the 5.5% we saw earlier this year. And so once again, we are seeing a little bit of the longer term bonds now to get decent yields.
But for the savers, 4.1% is still way better than
Then
a half
0.1.
of 1%, which is what they were getting for
For
quite a
long
while.
time. That's true.
If you were a saver, you just couldn't make money. There was no alternative to stocks. Yeah. Now there is an alternative.
Savers and retirees, right?
Well,
trying to live off,
Yeah.
yields. There was no yield for the past 10 years. It was hard.
Right. Well, I don't know about 10 years, but certainly for about a 3 or 4 year period where rates were almost at zero.
Yeah.
And fortunately, for our economy, rates did go up because that was unsustainable.
Right.
And talk about inflation. I mean, that was one of the reasons.
Why do you think the government didn't just issue boatloads of long-term debt?
We
zero?
suggested that. I would have taken 100-year bonds out at 1 or 2, or a half of a percent. But it's because it's government.
Right.
And everybody who's listened to me knows that I am not a big fan of government in general. Yes, we need government, but
smaller government.
Smaller. I mean, and they should have done that.
Right.
Okay, because now they're borrowing money at much higher rates, and that interest rate, I think it's something like 25% of what we now of our budget is just to pay the interest on these loans, and again, that is unsustainable. It's one of the things that Trump talked about that I hope, as a matter of fact, everybody has talked about. He's not the only one. Democrats talked about it too. I really, really wish, if I had one wish about this thing, is that we would figure out a way to cut some of our departments and all that. So we're cutting our expenses, and at the same time, figure out a way where the economy grows so that you really will get more tax revenue. And I think that's what they're talking about doing. But we'll see, because when Trump was in last time, he spent a lot of money. Yeah. So, he can talk a big game, but let's see if he'll follow through on it.
So as we're finishing up the end of the year, we're fourth quarter, just a couple more months to go in 2024. Now we're starting to think about 2025. So if you're planning for 2025, there's a few items that just came out that I wanted to share. The gift tax exclusion is going from $18,000 to $19,000 in 2025. And for retirement plan accounts, so if you're contributing to a 401k or 403b or 457 or thrift savings account, the salary deferral is going from $23,000 to $23,500. And then the catch-up remains the same, so that's $7,500, and that's if you're over the age 50. But what's different for 2025 is under the Secure Act of 2.0, if you're age 60, 61, 62, or 63, the catch-up for those types of retirement accounts is going from $7,500 to $11,250. So kind of in a big, it's a big jump, so making sure if you're in that age range that you're taking advantage of that. And then lastly, if there's a simple IRA plan, which some businesses have, those contributions limits are going from $16,000 salary deferral to $16,500. And then the catch-up for those is $3,500. And then once again, if you're the ages 60, 61, 62, 63, then the catch-up is going to $5,250 for that plan. So just some things to be thinking about as we're wrapping up this year and getting ready for next year, making sure that you make those adjustments.
And don't forget to make sure you max out this year's contributions
exactly.
before
Yeah,
December
if you have to,
31st.
yes. So if you haven't done this year, make sure that you've done that too.
So I'm wondering now if, that bill, and I forgot the name of it, that is going to sunset here as far as taxes are concerned.
2017 Tax Cuts and Jobs Act.
Right. I'm now wondering if that will in fact sunset, or if they will extend it and do something else with it. Yeah. Not sure.
Because there's also with that there's some estate tax rate changes too. That's on the horizon.
Right. What is the estate tax? They're talking about 13.5, right, million.
So we're looking at it. Actually went up for 2025. It's going up to 13,990,000, and then for 2024 it was 13.61 million. So it's gone up over the years, but once again it's up to be looked at.
If it sunsets, it goes back to, what was it, like 5 million or something like that?
5 or 6, and I think there's a little bit of inflation adjustment.
So for those people who have large estates,
yeah.
If they want to pass the money along to their heirs, they would have been cut short on on the old bill, where this bill says, hey, you can give. And one of the reasons that was popular is partly because of, especially farmers. A lot of the farmers couldn't pass along their business to their children because they couldn't pay the tax.
Interesting.
Okay, so what they were saying is, look, we're going to try to make it so that you can pass it along to your children without paying the tax. And of course, the other side says, yeah, but look at all the tax that we're not getting to pay for the different programs. So that's where I'm hoping that somewhere along the line we can cut something. And everyone says, well, you can't cut this, can't cut that. But I think we need to cut maybe across the board.
Yeah, I would assume that Trump would extend those tax cuts.
I think he will. The question is whether he'll spend less, which he didn't do the first time.
Right.
Okay. And whether they'll actually cut programs. It's like the only thing we ever think about, it seems like, is how do we raise taxes?
Right.
I'm saying, well, how do we get rid of there's a ton of bloat in the government. I mean, I think we kind of made fun of, but there was a plan to put chargers for cars in, and I think they spent something like, what was it, $8 billion, and we have 3 chargers.
Yeah.
Okay.
No, 2 of them don't work.
Yeah. I mean, come on. I mean, this is something that I think that the private sector should do more of, and the government should do less of. I'm only one person, but that is what I think.
I think just to touch on your topic about cutting bloat, if a lot of the government programs are moved to the states, the big question then is how will that affect the federal deficit? Because then it's in the hands of the states. So you may start seeing some of that government bloat, the big U.S. government bloat, start coming down. I'm a big fan of moving a lot of stuff to the states, and I hope they do. And the last thing I want to say is if they continue lowering interest rates, it will be incredibly good for small cap stocks, because small cap stocks need a lot. They need to borrow at substantially less rates than bigger cap stocks. So keep an eye on.
Because they might borrow more of what they need.
They need to, when they go to the markets, rather than go to the capital markets and dilute their stock, it would be easier then to go and maybe pick up some short-term or medium-term bonds at a much lower rate. So I think that, everybody's talking about small caps. I think that's a great place to be looking, and keep your eye on that ball.
Yeah, I know you've been talking about large cap for a long time, so that's a little bit of a shift for you, although I know you still like large cap.
Oh, I still like large cap, and I think they're going to continue to do well. And I think they're going to continue to do well because you're going to see a hell of a lot of M&A activity in small cap space. So, keep focus on that. That's all. And again, you got to give this administration a little time to see how their initial plans start working.
Well, we'll see. And by the way, you live in California. Bloat is actually an item on their budget list. So, no comment.
No comment. The political season is over.
Yes,
I'm over and done with it.
Yeah.
All right. Well, I think that kind of wraps it up for this week. It was an exciting week with the election. Some people are happy, some people are sad, but it's over, thank goodness. And we'll see what happens over the next week, and we'll see if that initial burst in the stock market will continue. Who knows whether it will or not? But thanks a lot for listening, and we'll see you again next week.
Thank you.
Thanks.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.